In terms of the numbers, where are you seeing those dollars go instead?
Well, there's a lot of cities. It's not just a few. There's a few that get attention, like Austin, Seattle, more recently Miami, but it's really dozens of cities that are rising. We started this effort, as you know, a decade ago when I was chairing the White House Startup America effort. Then we launched our Rise the Rest bus tours about 7 years ago, about Rise the Rest funds about 4 years ago. So far, we've invested in 180 companies in 80 cities. So this really is quite widespread. But the report we did in partnership with PitchBook, the data that's particularly important, there's 3 points I would make. The first is, for the first time in 10 years, the venture capital going to the Bay Area is less than 30%, which I think is significant. The second is there's been a 600% increase in the last decade of these Rise the Rest cities in terms of how much venture capital went from 4 billion to 24 billion. So outside of San Francisco and New York and Boston, that's the phenomenon, 600%. And finally, and perhaps most importantly, in the last decade, 1,400 regional venture firms have started all across the country. And since it's important to seed companies to get them going, it's also important to seed funds to get them going. And once you've got that happening, you start seeing these cities rise. So I think what we're seeing now is an acceleration, partly because of the pandemic, that will continue into the next decade.
Now, you estimate that about 75% of all venture capital dollars still end up in the Bay Area, New York, or Boston. What do you think that number should actually be? What should the percentage be? What would be fair or right given the distribution of talent and opportunity?
Well, given the distribution of talent and opportunity, over time, it should even out. It should level out. And in the short run, if we could, over the coming years, see the Rise of the Rest cities double, that would be a great step. We've seen some momentum just in the last few years. Hopefully that will continue, which would mean those other states would go from 25% to 50%. So the three big ones would at least go from 75 to 50%. That would be the nearer term thing. But over time, we know that the data is pretty compelling, that opportunity is equally distributed, creativity is equally distributed, but the capital is really not there to follow those ideas. And that's what really needs to change. But I think this report suggests it's starting to change. Hopefully it will accelerate in the years to come.
Do you have any advice for cities and policymakers about how they can better attract those dollars?
Yeah, first is to focus on the new companies, startups, not on big companies. For too long, economic development has been how do you get a big company to move their headquarters or open a factory. The real focus should be on, in terms of more sustainable economic development, on these small companies, some of which will end up being big companies. And second is to drive more collaboration in your city. That's we've seen in all the cities we visited is critically important. Get the university working with the big companies, working with the small companies, working with the nonprofits in that particular area. So there's a collective effort, a collaborative effort to create a strong startup community. And the third is to tell your story. Make sure people know about what's happening there, what's unique about your city, your history of your city, the particular industry expertise you have that you can build on. That's becoming more common as well. So I think we're seeing a lot of people that are champions of the startups that aren't just the traditional startup kind of cheerleaders, if you will, but a broader group in these communities. And as you have successes, as you have these iconic companies that develop what some call tentpole companies, then a lot of great things happen, and there's a spin-off effect from it. Even Seattle, when Microsoft was getting started there, it started in Albuquerque, then moved to Seattle. Seattle was struggling. But Microsoft was successful. Because Microsoft was successful, Jeff Bezos moved to Seattle to start Amazon there. He figured he could pick off some engineers. They obviously were very successful. Now Seattle is really booming. That's the story, going to be more and more the story all across the country in the next 10 to 20 years.
The other big story all across the country is the continuing scrutiny from Washington of big tech. We just saw Adam Mosseri, the head of Instagram, testifying on the Hill. When you look at this, do you think it's tech companies that need to step up, and can they really regulate themselves? Or is it Congress and lawmakers that need to create some framework that these companies can follow?
Well, I, as you know, wrote about this 5 years ago. I wrote the book, The Third Wave. I said that this next wave, its policy is going to become more important, and having more of a conversation, more of a bridge, really, between innovators in Silicon Valley and policymakers in Washington, D.C. and Brussels and other places is critically important. I think we've seen that develop over the last 5 years. That will continue in the years to come. So part of this is educating people. The congressional hearings, both the Senate and the House today, both on Instagram, as you mentioned, but also on crypto, part of that process is educating them. But I think you have to really respect the policy process and really engage. Otherwise, you won't like some of the decisions that are made. So engaging is important. Taking taking a first step, both as a company and as an industry, to try to put self-regulation in place is important. But sometimes people wait too long to do that. And that's when the government steps in. And some of that's happening now.